I think there might be a chance that Roaring Kitty, Keith Gill, may be compromised. Now, obviously, I think there's a low chance of it, but it's a non-zero chance. But something at a minimum, I think we all can agree something suspect is going on. Now, over the past couple months, we know he made his glorious return to the market, to social media, getting into GameStop. He had 5 million shares, 120,000 calls. And at one point in time, he went from the 5 million shares and the 120,000 calls. And when all the dust settled, his final post to all of us was that he had 9 million shares. So no, that doesn't mean that he exercised it all, because if he did, he would have 17 million shares. So he exercised some, and then he kept some cash on the side. But overall, from his publicly posted accounts, the money was clearly in GameStop stock. Now, a little bit ago, people started to notice that Chewy, CHWY is the ticker symbol. This is important because it was operated, run, and co-founded by Ryan Cohen, who's obviously now running GameStop. So as soon as people started noticing it pick up in its stock price, they're like,
okay, that's a little bit interesting.
And then all of a sudden, on June 27th, to wrap up the quarter, we saw Roaring Kitty post this, a picture of a dog. And right away, they just saw that it was pet related. And this was very similar to the playbook that Keith Gill was running before. Remember with GameStop, we saw the price action pick up. Then we saw him post the meme. It was the guy like gaming in a chair and he leaned forward. And then a little bit later, he posted his position. Chewy shares rallied 20% after SEC filing reveals Roaring Kitty Keith Gill has a 6.6% stake. So if you look at Chewy right now before the market opens, currently trading right at $30, it is up 10%. But this is exactly what I'm talking about. So right here, we see an abnormal pickup. So it's because of a good earnings, but then there's a nice follow through with it. And everyone starts to think, okay, like what's going on? Now, do you guys see the difference? Not the differences, the exact similarities. See how there was a pickup in price and then a meme got posted, it pumped, and then a little bit later, he reveals his position, he starts to stream, and then it goes again. There's really not much of a difference. There's nothing new under the sun. So once again, we're seeing excitement beforehand, as in someone knows. They get in, it's excitement, then we see this meme get posted, and then surprise, surprise, the stock absolutely rips. Chewy shares surge after Keith Gill discloses a $245 million stake. Now, he didn't post this on Reddit the way he did with GameStop. This one was a legit SEC filing. It's a 13G filing. He did make a joke right here. Check the appropriate box to designate whether you are a cat. I am not a cat. And then right here, you can see that he has 9 million shares. Now, if you do the quick math on it, when you look at this account that was worth $268 million, it is mathematically impossible for him to have 9 million shares of GameStop and 9 million shares of Chewy on this account at this value. So what does that mean? It means he has a large account somewhere else and he has some sort of backer that put the money up. I don't know. Maybe that's possible. It's also possible that he sold some of his GameStop and put it over to Chewy. We don't know. But what we know is, as of the recent filing, we just know how much Chewy he has. We have no information about GameStop. He could have bought more. He could have sold some. Maybe he kept the same amount. And like I said, there's a backer. My point here is something suspect is going on, because it does look like Keith Gill is running back the entire exact game plan that he ran about 2 months ago with GameStop. He's just now doing it on another one. And it has a lot of pump and dump vibes. So right away, I know one of the common questions is, okay, is this a squeeze play? It's not a squeeze play. The short interest is just below 16%, which is a decent short interest, I'll be honest, but the cost to borrow is nothing and the utilization is nothing. This doesn't have the ingredients that are necessary for some wild squeeze play. So the cost to borrow extraordinarily low, the utilization extraordinarily low, and the short interest is like somewhat decent. Shout out to public.com for sponsoring this portion of the video. If you're an options trader, planning on becoming one, or just generally interested in the markets, you're gonna wanna listen up. For those of you who don't know, public.com is my favorite place to trade options. If you're wondering why, the answer is simple. It's the most cost-effective place to trade options. In fact, you can earn a rebate on every options contract that you trade. That means that you get paid a rebate for each time you buy and each time you sell for each contract you're trading. I love it because it allows me to focus on my actual trading rather than the headache that is trading fees. Now, beyond options, public.com offers you an entire suite of tools. They offer exposure to stocks, options, bonds, crypto, and even have a high yield account that's currently sitting at 5.1%. With all of these offerings, no commission fees, and no per contract fees with options trading, I'm confident you'll enjoy public.com as much as I do. So if you want to check it out, go to public.com/Matt Kohrs or just click on the link in the description of the video. Thanks again to Public for partnering with us, the Goonie community. I guess I wanted to get all your thoughts because something absurdly strange is going on. I can't really make sense of it. Do I think that he's compromised? No, but I think Keith Gill is very much becoming almost the antithesis of the symbolism of what he was. He now seems to be becoming a pump and dump artist, and I just wanted to get all of your thoughts on that. The final thing I wanted to share to wrap this up, Keith Gill, a stock trader known for his role in the 2021 GameStop short squeeze, is facing securities fraud allegations in a class action lawsuit related to recent social media posts that caused volatile price swings in GameStop stock between May and June. The complaint, filed on June 28th in the U.S. District Court for the Eastern District of New York, accuses Gill of orchestrating a pump and dump scheme through a series of social media posts starting on May 13th. Do I think this has any merit? No, because we have freedom of speech. You're allowed to post memes, so I don't think this will go anywhere. But it's just another little, I guess, twist in the story of strange things going on. From a legal perspective, do I think that he's pumping and dumping? No, I think that'll be absurdly difficult to prove. But from a moral perspective, what he's pulling off are pump and dumps. And I don't know if it's directly benefiting him or if it's benefiting him and some sort of backer. I don't know. That's unknown information. But what we do know is there's something crazy going on, and I don't think that this is the end of the story. And right now, the way that the story is going, it doesn't seem to be a positive one. So if you choose to get into this, yes, you can make a lot of money. I should have said that at the start. You can make a ton of money, but this is not for people who just get into it and hold blindly forever. This is for active traders. You can actively play to the upside. You can actively play to the downside. The trend is your friend. Whichever way it's trending, you can play that, but obviously be careful because we've seen these rugs before. The dump side of a pump and dump never ends well. You're in this to make money for you and your family, not just to be like,
Well, this guy who's taken on the symbolism of fighting for retail on the internet, he's doing some weird stuff. So I think it has to work out fine for me.
No, your number one job is to worry about your account for you and your family. Ride the trend as long as it exists. Obviously, this is some high level degeneracy, but as soon as the play is over, you gotta pull the ripcord. Do not get caught in the rug. Folks, we've seen this. How many more times do people have to see this? It's like right in all of our faces that it's happening time and time and time again. And then yet people still want to argue about it, saying, nah, I don't know, man. I don't think it's a pump. What do you mean? It's in our face. Like, what, you have to see 30 more times to finally be convinced? It drives me crazy. If you are waking up this morning and thinking everything's rosy and great and you're going to make money off Chewy, yes, you can make money, but this isn't one of those things where it's like, oh, like we're taking on the men. Chewy's not a squeeze play. I showed you the short interest. I showed you the cost to borrow. I showed you the utilization. It's not a squeeze play. It's a FOMO play. He's building up FOMO for his own exit liquidity. It's exactly what we saw on GameStop. And I don't know how many people can just keep falling for it and falling for it and falling for it.